All right, let's get started. Let's jump into the different positions that we want to take a look at today. We're going to start with just a bunch of stuff that's in our trading account here. So as we look at the trading account, I'm going to just go alphabetically, and we're going to start with the ES trades that we have on. So the ES trades in the E-minis, those are our black swan hedge trades that we have on here. And just a quick look at the market. So we're dropping nicely today, 18 points down, big deal. All right, so these are our black swan hedge trades. You can see that some are already starting to wind down. Let's take a quick look at where we are on these. So the most near-term ones, if I scroll all the way through as the market keeps cranking higher, yeah, we have 5 of these 2100s. Again, this is black swan. This is, the market going completely to hell in a handbasket. We have 5 of those on at that strike. And then here you can see this is a little bit more recent on these. Was that right? August 20th? No, August 31st, sorry. All right, on this one, we've got, we had put these on, we had sold, again, we sell 3, we buy 5 as we go. So we sold 3 of these. Let me take a quick look at the spreadsheet. That is what, the 2600s. There, so those we had originally sold around $3, and then the 2550s here, we had purchased those, and once these sold strikes get to 20 cents, we will buy them back and take those off. We'll be left with the 20 longs on there, and then we also have a little bit more recent one, the 2200s here. We have sold these. So we sold the 2200s. We sold them for $345. They're down to $235. Getting as the market moves higher, we're moving up. So this is just, again, a black swan hedge. If the market drops 10, 20, 30% or something, we'll be hedged. On these, what we'll be doing here is on the 2100s or so, we'll probably look to buy these because this thing has really moved quite a bit already. We'll probably look to buy these somewhere around $1.50 or so, $1.80. We'll buy 5 of these, and then as soon as these 3 get to 20 cents, we'll take them off. So essentially, they're free trades that we have on ES, and those are our black swan hedges. And we've got one more here as well on this. I think we already covered this one as one we just did. So the 2200 one is what we recently sold, and we'll wait until we get the chance to buy the 2150 or 2100s for $1.50. Then we'll sell these, or we'll buy these back at 20 cents. So even though there's a low P&L, open here, I'd kind of discount these things because they don't really matter, because it doesn't take in the fact that I've already closed and taken in the profits on selling the short calls. So those are the black swan hedges that we're using ES for. So we've got not a huge amount of delta on for those, but they don't cost anything. So they're on. Let's take a look at the MES trades. So in the micro E-minis, we've got a variety of different trades, but primarily we have our daily MES trades that are on. And so you can see all of these. I've been doing roughly the 2 contract versions. I'm going to up it to 3 contracts starting in August. And there's a couple other trades in here that we'll look at, but essentially what I'm doing here is on this account, again, we've been using it for about 4 months or so. It's been going pretty well. We're going to look to sell this 38 30, which is the oldest trade that we have on, but I don't always take the oldest. I will take the most profitable trade out here from a percentage basis wide, but that's also about the same thing. So this is the one we're going to sell today. And essentially what I will do every morning is I will go in, I will close these out. We'll look to get about 550, put the order in, boom, oh, and got filled. So there we go at $5.50. And that'll be a 72% gainer. And we close out the oldest trade on there. So give me a second. We'll post that thing in alerts. Okay, so there's all I have to do today. Close my daily MES. That happened to be a 72% profit. Not fantastic, but not terrible. We'll take 72% premium capture on the daily. Posting that in alerts real quick for you guys, and then we'll move on to other things. We'll put one on as well. All right, so we bought to close one of these already for today, and that now puts us overall for the month. We'll take that, take a look. Screen share thing gets in my way, so I can't see. I know you're not looking at my screen. All right, so we're up a little over in this account here. We have booked, in fact, I'll switch screen share so you can see what it looks like. So hopefully this makes sense to everybody, and I will re-screen share. Take a look. So here's where we are for the month of July so far. This is every trade that we have put on, what we sold it for here, what we closed it for here. Here's your P&Ls on the day. Again, we're at about $3,100 with what, a week to go. So we're averaging right now 176, which is down because the market just keeps going up and premium been a little bit tougher this month. We had some nice $200 and some ones early on. You can see last month we booked almost $5,000 in profit. The average was a bit higher than that. So booking some nice profits on those. We'll stop sharing, but you can see there's how I track it on my spreadsheet. And that's where we are. So what we need to do today is we need to add a new position on MES. So we're going to go quickly through these things. I'm going to go out. I'm going to go to 60 days, but not over. So we're going to still be looking at the September 17th. I'm going to go about 10% out of the money. We're going to go right in this range here. I'll usually try to get at least 20 cents right now for these. Kind of like this 38.80. I don't already have one on there. We'll create two. We'll put in an order. We'll let this thing just cook for a little bit. And that's all we need to do. When doing this as well, I don't remember who was mentioning it yesterday. Let's take a quick look as well. Looking at the buying power opportunities when you're trading futures now, because I do have other trades on as well, they all factor in together, but I'm using, I did two, oops, we got filled, so we'll book that one. We'll post that in a minute. So we're looking at these two here. We just got filled at 225, but those two, I'm selling them for $2 or 223 I'm sorry, $225. Well, I'll take in because it was at 22.50 or when we put this on, and my buying power for that was $47 based upon the margin that it takes in futures. So really margin efficient type of trades. And let's take a quick, and we'll post this as well. So let me just crank this out and put it into the alerts here. And this is it. I mean, this is as hard as you really have to work if you want to just make 3 to 4% a month and never really worry about your money. Worry about it a little bit, but it's a lot less stress than everybody doing all kinds of calculations and where's my stocks on these things. And my buying power was infinitesimally small on these. So I'm going to post that in. We'll post it in Slack. And it takes me longer to type than it does to trade. All right, so there you go. So we sold one and we put a new one on today. So overall here, we've got a variety of these trades on, and then there's a few others which we're going to get to in a few minutes here on MES. But that's it. So we're always looking to take off these oldest ones somewhere in here, and I'll take a look at the most profitable, and that's what I'll take off. If everything's pretty much the same, I'll just keep cleaning off the oldest ones as you go. So you can see the newest ones be down in this range. So there's today's, I believe. So there's today's trade, and that's where we are. It's already moving south as the markets continue to sell off. It's all good. Not too worried about it in there as well. I did do some of these calls. You can see, so there's some calls on these as well. I think I'm just going to keep my life simple and stick to the put side on them. So there'll be some calls. They're going to give us some profit, some additional juice. But I think it's just an easy trade just to put one on, take one off, not have to figure out the call side. Let's go about 10% out of the money and boom, make the trade, and we're all good. All right, so there's MES. We'll come back to MES because there's more trades in that we're going to deal with. Here's Airbnb from yesterday. So we put on a put spread. It's pretty much just flat, doing nothing in here. So, or not put spread. We just sold a put in Airbnb. We sold a put here in Citi, and that one's also is up a bit already. So it's up 62 bucks. We just did 2 contracts on that one. All right, IWM. So let's get into IWM and some of the different things that we have going on in here. This one here is a long put that we have. So this long put was more of a leap that we put on. In fact, when did I put that? I don't know if I have the original dates. I think that one was put on April 9th. So this is from April 9th. And essentially what I do, this is giving me negative delta. So it's giving me 60 negative deltas here, which is exactly what I use it for. It's up decently here since we bought it, but I don't care. I just care about the negative delta. If we make some money on it, it's great. But what I normally will do on this is every single week on that trade, I'm going to sell a put against this put. So it's essentially an opportunity to buy a hedge for essentially free. And I paid $26.23 for it, but I'm not going to worry about that right now. I'm going to take a look at the fact that this is 52 days. You can see, so there's 52 days left. So 52 days left is what? A little over 7 weeks. 7 weeks. And I paid $26.23 for it. But my overall on this stock right now is it's under 20. It's under almost under $20. I've been working it down. So if I have roughly $20 remaining, divided by 7 weeks to go, I'll try to at least capture $1.80 or something like that in here. So I'll look to sell a put against it, and that'll just keep reducing my basis. So even though what you see here is what I purchased it for, that's not my basis anymore. So this is up, but my basis is under $20 now because I've been writing puts against this thing almost weekly since April. Now I don't have any on it right now because of the fact that I don't like the market here. So I'm going to let the market do its selling thing, and it'll give me a little bit of extra bump today. So you can see, generating some nice profits today as we drop down, and you can even see we're getting a little bit from those long ES black swans, which is not what they're on for either. They're not on for little down days. They're on for, the market goes to hell in a handbasket and we're all in trouble. Except this account will not be in trouble. All right, so let's jump into, see if there's a question. Why only IWM for selling put? Why not other indices? Because it gives me something different. And IWM has been the weakest of all of the indices. So that's why I like doing this on IWM. It gives me a little bit of diversification, but it's also been the weakest. It's not tech heavy. And this whole market is being propped up by 8 stocks. And those 8 stocks, your Amazon, it's right here. So Facebook, Amazon, Tesla, Microsoft, Apple, Netflix, Google, and Nvidia. Those 8 stocks run the world. Those 8 stocks go down, everything goes down. None of those really are reflected in IWM. So these have been on fire. It's earnings week. They may continue to move, although we're not seeing great stuff today. But you got 8 stocks that run the world, and they've only been going up for the most part until today. So that's why I use IWM, is because it does not contain those stocks, and it's been a lot weaker. So that's why it's giving me a really nice down push. I'll probably look to unwind and reload something here, although I don't know that I need these negative deltas as much anymore. So hopefully that answers that question for you, why IWM. You could choose it in any index you want. You could do it in SPY. I wouldn't do it in QQQ necessarily, but I could do it in SPY. I just happen to like doing it in IWM. It doesn't really matter to me which index you pick, because the key is you just sell puts against it every single week. So if it goes down, you've got negative delta. If it goes up, I'm selling puts against it. I'm reducing the cost basis of it. So I'm going to pay it off. In this case, not completely, because I stopped selling against it for a week or so while I let the market go down. The right time to buy? Well, sure. Right. Anytime right now is a great time for me to buy puts. When the market's at highs, and I think we're just overextended, and we're heading into a seasonally bad month of August, that's when I'll look to put some things on as well. And I would like to go out farther. So I'll typically try to put these on around 120 day when I do them. I think when I initialized this IWM, I did it at 160 days. So 180 days out, 120, 180 days out is good for these, in my opinion. All right, let's take a look at this double calendar that we have in here. So here's our double calendar, and essentially what we're doing on this one is we just put this on the other day. So we're going to buy the 2 longs that you see down here. So we're going to buy the September. I'm going to buy the 210 put. I'm going to buy the 230 call. So they're slightly different strikes. We're kind of straddling this number a bit, strangling this number a bit more than anything. But these 2 we're putting on. So I paid $643, $304. So overall for this trade, I spent $9.32. Or it looks like $9 and $9. I'm sorry, I put it on for $586 and $346. Looking at the wrong thing. So I spent $9.32 on this, and then to complete the double calendar, I'm going to now sell, and I sold a 7-day, or it was really 8 at the time, 7-day 210 put and the 230 call against it, and took in a little over $1.11, I believe. for that. So ticking $1.11. So my overall cost basis now is down to $8.21. I will wait till Friday till all of the juice has come out of these, and then I will roll these to next Friday. So I'm going to do it. I have 65 days remaining, but when I put this on, I had 70 days. So when I put it on at 70 days, if I roll it weekly every 7 days, it's going to give me roughly 10 rolls. If I can take in roughly $1 each time, I will totally pay these off and then have some credit left over potentially, plus wherever these things may have moved to. So I'm still going to have juice left in these at that point in time as well. One of these is going to be in the money by at least $10. So one of these will be in the money by $10 because we put this on at 220. So wherever this thing ends up, we're going to be in the money on one of these. One of these may go worthless. Let's say the calls go worthless, and this thing goes down to 210 or something. Well, the call will be worthless. This put will technically be worthless at that point in time if we stick at 210. But I will have made the money on these and paid those off. If we drop to 200, then this is going to be $10 in the money. If we stay around 220, then we're going to lose on both of these longs. So we're hoping that we stay in here for the most part, which is going to help these give us lots of premium. If we make a big move either way, then one of these things is going to be in the money. But we'll see how the trade hangs out. But I do like these as little income trades as well. So how did I choose the 210, 230 strikes? Essentially with those, it was selling for 220 at the time, and I wanted to try going 10 wide on each. Last time I did these on SPY, I stuck right at the 220. If I would have done it at 220 and stuck right at the money, I would have put the 220 on. It really doesn't matter. I'm playing around a little bit with these strikes. So that's the only reason I didn't use expected move. None of that was a factor in putting this thing on. So we're well within obviously expected moves here on this. I just wanted to strangle it a little bit by buying a strangle essentially. I've done them at the money. I'm trying this one a little bit out of the money on both sides just to see how it reacts. And we'll see where we go. The only thing with that is, again, if we finish inside here, then these are both going to end up worthless. When you do at the money, if you get a big move, one of them is going to make some decent money. So I'm just playing with how each one reacts right now on IWM. Kroger, so this was a Captain Jones trade yesterday. I joined him with a little bit different. He's a little bit longer out, but I also sold a put on Kroger. Love. So here's Love. We did a naked put on Love. We sold the 60 puts, and we had made quite a bit on those for a while. So we were generating, I don't know, I have to go back and look. 200 plus a handful more. So there's a couple $100 already on Love, but we obviously got assigned on 4 contracts of this thing at 60, which is all good. I don't have any problem on it. I would prefer to have rolled, but it was moving so far past I couldn't get credit, so I'll take the assignment. But what I do on these on this one is I start to sell strangles. Now I sold a strangle last week on it, and I closed out the strangle. The calls expired, the puts expired. I put a new put on. I did not put a call on this time because we're still sitting down around this 50 level. I sold the same number of contracts. If I get assigned at 50, then my basis is going to be 55, and I'll start to then only sell calls. I won't sell any more puts, but I don't mind. I don't mind this down a little bit on the trade. we'll just work it back. It may take a little bit of time. If we get assigned here at 50, we'll own 800 shares at 55. And I'm going to start selling calls right at 55, and we'll sell calls on that 55 until we get assigned and they get called away. So we're only, even if we get assigned here at 50, that'll put us at 55 cost basis. And we're really only 5 points away, which is a couple good weeks for love on average. So not too worried about love, and we'll just sell calls against it. Neo, we're in Neo. We sold the 42. Neo's having a bad day today, so we're down. We're below on Neo. So we've got 10 days to get back above it. If we don't, we'll roll these out and we'll keep the dream alive. On Neo, Nvidia, we have a long call. So this is our leap on Nvidia. So what we did yesterday, and we talked about it briefly, was I bought a leap, and this leap is an out of the money leap. So we went out 542 days to January 2023. Nvidia was down yesterday, or down the last several days, pretty good. So I thought it was a good opportunity to get in on Nvidia at 220, which I feel is a good number that we're going to move higher on. We're only down a tad today. So what we did was I bought a couple contracts of Nvidia in this particular account. I did it in 3 other accounts as well. So we bought the 220 leaps here, and what we'll wait to do is we'll wait to see if Nvidia over the next several months starts to work its way back up here to 220. If we take a look at Nvidia as a whole, we can see that Nvidia has been up here as high as 210 or so. All we are waiting for is a little reversal and see if Nvidia wants to flip back up. Now today we're getting the PSAR reversal signal on Nvidia, which we expected to happen since we had the dots hitting the top of the candles. So we're getting a PSAR reversal signal. Might spell an opportunity for Nvidia to start to reverse higher. MACD, and I don't necessarily like Tastyworks charting. I'm just using it because we're on this particular platform. I think Tastyworks charting sucks. But your moving averages, the 200, the 100, the 50, they're all stacked. The 8 and the 21 EMAs, we're right about there, almost stacked on those. So you can see MACD reversing higher, squeeze, popping lower, and then RSI is just kind of meandering around in the middle here. So I think I'm all good with this, but essentially what we're looking to do is if we move up to 220 in the next, or towards it, maybe we only get to 210, maybe we get to 200, 205, I don't know. But then I'm going to look for something that's fairly wide, possibly these 250s. If I can buy the 250, because I want a wide enough spread, I want anywhere from a 30 to 40 point spread. I don't want a 5 or a 10 or a 15 or a 20 wide spread that doesn't really do me good. I'll try to keep up with some of the questions in chat. But let's say the 250 here. 30 wide's a minimum for me on something like this. Maybe twice the, like a 20% width or something. But let's say I can buy the 250 for, what did I spend on this one? I spent $27. So if I can buy the sell the 250 at around 27 bucks, that's only $10 higher than what it, where it is here. So if the market moves up where 250 becomes roughly worth $27, I will sell, or more. I'll sell this strike out here, and that'll essentially give me a vertical spread. So I'll own the 220s, I'll have sold the 250s, and the 250s will have paid for this. So it'll be essentially a free trade at that point in time. If I sell it for a little bit more here than I paid, then I'll actually get paid to put this trade on, and I have 542 days. I'm pretty confident, doesn't mean it won't go to zero, but I'm pretty confident that in 2 years, Nvidia will be higher than where it is today. And if Nvidia happens to get to 250, which would be, a decent little move, but 10% a year is only 20 bucks. So if this thing only goes up 10 to 20 per 10, 15% a year, we'll hit that. But if we get to 250 on expiration, anything above 220, I'm going to make additional money on. If it gets to 250, I'm going to have a 30 wide times 200 shares. Not a great, not great, but for free, an extra $6,000 in a year or so. So I'm not too worried about it, because essentially it'll be a free trade, and it won't be using any buying power, it won't be using any money in the account. It's just a free trade that could pay off to $6,000. Some of these will pay off even more as they go. A little quick question: how far out in the double calendars? When I put these double calendars on and whatever underlines, I like to go anywhere from 60 to 70 days out, so that I can get myself about 10 rolls if I do weekly rolls. I was doing some Monday, Wednesday, Friday rolls. It's just too much work. I don't want to work that hard. So we'll do about 60, 70 DTE on the longs, and then we'll do 7-day on the shorts, and we'll do it every single Friday. We'll crank out some additional money on that. All right, so market's still down 20 some odd points. Now let's get into some of the more fun and unique trades that we have on. So let's take a look at what we've got going in SPX. Right now in SPX, we have two broken wing butterflies that we sold roughly 45 days out. The first one being, in fact, we can actually do a little bit of, I hate the Tastyworks analysis tab here, but so here's what this one looks like. Can't get it all in the picture, but initially I think this was around a 20 delta at one point in time. We've moved up, obviously here. If the markets move down, then maybe this comes into play. We still have some time on this broken wing butterfly, but you can see there's no risk to the upside. And if we stay where we are, I make 265 bucks on that one. So not too bad on that. So we'll make about 265 bucks on the upside. You could close it here. It's almost at that profit now, but I'm leaving these on because it gives me a little bit of a hedge. If we start to move down, maybe this thing can come into play. I don't know. It's a long way down, but it still pumps a little hedge. I think we're going below 38.70. I hope not. But that's 500 points from here. That's still a 10% move, could get us down there. Then this thing starts to really pay off a bit more. But you can see it's just an easy little trade. Same thing here. I'd put a second one on here as well. Let's make sure. Okay, here's the same thing. This one you can actually see it in here. So you can see that we're sitting way up here, even on a down day. If this thing expires, we're going to make 235 bucks. I put these on roughly every week or so, every 2 weeks, and they're pretty far out of the money, broken wing butterflies, that if we start to eke down into here, then this curve's going to start to pay off a bit. Maybe we'll get some additional benefit. And if we get all the way down here to 40.50, meaning the market's going to dive 400 points, which is possible. If we hit 400 points down in the next several weeks and we land inside here, beautiful. So there's where we are on a few SPX trades, 2 butterflies on SPX. Now let's get into some even funkier stuff, and let's start to look at SPY. So SPY, we have a couple of 1-2-0 trades. Essentially what those are they're butterflies without one of the wings. So let's take a look and jump into these. All right, so looks similar? Yeah, looks exactly like the broken wing butterfly that we had on. So here's the trade that we currently have on. So this is again, I call it a 1-2-0, and which is what I think Tony from Mexico called the same. But what we didn't do is we didn't buy this crappy out of the money put here that limits our loss. And the reason for that is I need SPY. I want to own as much SPY as humanly possible in my lifetime. So in my IRAs, that's the goal, is how much SPY can I die with? Because SPY goes up over the years. And for most people, if you just bought SPY and just held on to it, you'd be ahead of most of you in trading to begin with. But this is a way to buy it. So what happens here is you can see the curvature on the T0 line. So right now, this says no risk to the upside. It's 114 bucks. If it expires, okay, big deal. But it's already worth right now 193 bucks. So it's worth more because you can see this curve. If we start to head down into this area more, the 420, 430 range, if we start to get into that range here, then you can see we're going to start to really make a lot more. And if we head into this tent at all, now we can be talking, several hundred more, $1,000 if we got lucky enough to pin it, which that would probably never happen. And then if we go to hell in a handbasket and we drop to, again, 3,900 on SPX or something, well, my break even on this here is at 393. So I still have 50 points to go on SPY, 50 points on SPY, which is a long way to go. But if we do, we're going to get assigned. Where are we going to get assigned at? Well, we're going to get assigned on the 40, I believe it's the 409. I didn't even look at what this one was. So a 407 on this one. So if I'm going to get assigned at 407, but my cost basis is really 393 on it. So I'll own. Was it? Did I look at that wrong? No, I got it right. Okay, all right, so I'm looking at the right one. I'm looking at a spreadsheet at the same time. So yeah, 407, I'll get assigned. I'll own SPY at 407. I'll actually own 2 contracts of it right here, but my cost basis is actually way down. Is actually a little bit below that. It's actually like 406, 405 and change is my cost basis because of the credit I took in. So it's okay with me. I'll own it here and I'll watch it go up and we'll own some SPY. So right now it's a nice little hedge, gives me some additional money. Now we also have another one of those trades on. And let's see if we can pull that one up. So we also own the September 30 version of that. So here's the same type of thing. So you can see I like these type of trades, whether it's a broken wing butterfly or whether it's a 1-2-0 trade. Either way, I sold one, I bought the one put here. I sold 2 puts down here. This one happens to be the 409-387, I believe. Sorry. So this is the 409-387 trade. And so if I get assigned, I'm going to own it at 387 minus about $1 that I took in. So I'll own SPY at 386. So I'll own more SPYs at 386, which is a great discount. You can use this on almost any stocks to buy stocks, or you can just sell the put. But I like this because more than selling the put, I get the chance to hit some home runs if we drop down either closer or in the tent here. We'll make some decent money. So it's a nice shorter term hedge. You remember the black swan hedge that's in ES. Those black swan hedges are for like absolute disasters like nuclear Armageddon, world goes to hell in a handbasket, but they're free trades. So eventually I get all kinds of long ES way out of the money for free. So the world crashes, everything goes to hell, then we're going to make a bunch of money on those. We're going to lose on some of these. We're going to get assigned. But these are the intermediate loss trades. So if we just start to slowly grind down, you can see we're starting to make more and more money. Right now we're up, what are we, 315, something like that? Yeah. So we're up 315 You can see on the line. So right now we're up 315. If we keep going down, 370, 430, 450. Okay, and then potentially you have, opportunities to really start to get up into thousands of dollars on just a few contracts with SPY. So there's the 1-2-0 trades. Let's get out of that trade, and now let's take a look at the 1-1-1 trade. So here's the 1-1-1 trade, and this is what we're looking at. So again, very similar looking, and I like the 1-1-1 better. I will probably let those 1-2-0s finish out their day here, and I will probably stick with the 1-1-1 trades. Why is that? Well, because I have a much bigger target range here. I still have nice upside. So I have no risk to the upside. If this thing stays up in here, keeps going higher, I make $200 on the number of contracts that are in this one. But look at this T+0 line. You have a lot more space in here versus what we had on the 1-2-0, or even that broken wing butterfly that we saw in SPX. Bigger trap. So this is similar to the bear traps that we have been using here. And if you haven't seen the bear trap, it's pinned to the top of the channel. It's also in the forum. You can read some of my outlines on the bear trap, but this looks exactly like the bear trap, except what we've done here is I've not given myself downside protection, but I have, but I'm not going to manage it the same way. This one I'm managing a little different. So this is a 1-1-1, technically a 2-2-2. So I bought two. I want to make sure which one I have on right now. So on this 1-1-1 trade, I bought two of the 409. I sold two of the 404. So I go 5 wide, and I move these around until I get a credit. And we'll put one on today just to see what it looks like. But I bought the 409, sold the 404. So I have a put debit spread in here. And to pay for that, I sold two puts naked way down here at 370. Okay, that gave me enough money to pay for this and give me a credit. So I put this on for a credit, which is why I have unlimited upside potential here. So no matter where it goes, I make $196. Is that a big deal? $196, I'll take it. But if we start to move here towards the trap, you can see how the T+0 line starts to really crank up into there. And this is obviously the theoretical on expiration of being inside of this. In the bear trap, we used to call this the tail. So if you see me refer to the tail, this is all of the tail up in here. If we expire in the tail, great, we make money. This I call the trap. If we expire or get into the trap near expiration, we're really going to pay off in here nicely. So we have lots of great downside protection. And if we continue to stay up here, what we can do on these, which makes them really unique, is I will probably close out one of these two puts down here, which will reduce my downside potential, but I'll still have the opportunity to buy SPY at, you guessed it, 370. So I have the opportunity to buy more SPY at 370, which is a $70 dollar drop from here. I mean, we're down $2.75 today. We're talking 35 times today's drop, which is not a very big drop today when you're down 27 points on SPX. We're talking a 700-point sell-off on SPX. Can it happen? It can, but man, I'll love to own this thing down in here. So I will be happy to own this. I got paid to own it at 370. But if you land in here, look at the profit potential. The profit potential is almost $1,000 or more inside this range. Will we get this profit? Probably not. Will we get some of this? Potentially, if we get close to this area here, this is the sweet spot, being right at the entrance to this trade. So this is the 1-1-1 trade. Maybe we'll put one on this morning if we have time, and I'm going long on these things, so I gotta shut up here. All right, so there's some SPY. Now let's look at another unique trade that we have on. And this is the, I know this is weird stuff today. So just hang in there with me as we go through. But now I also have a 4-4-1, similar to strategy, where we're going to, on this one, I'm going to sell. Okay, on this. So here's our 4-4-1. Oops, just so you can see. On the 4-4-1, I'm going to buy the 422s. I'm selling 4. So I'm buying 4. I'm selling 4, 5-point Y difference. And then I'm going to sell 1 way down in here. That's going to give me a credit, an overall credit on this. Now, obviously, this does not give me the unlimited upside. You can see that really there's no gain. I'm going to lose 23 bucks if this thing doesn't crash. But if this thing does, this is a big fat area. This is a big meaty looking hedge. And if we drop down in here at all, if we go down 5, 10%, 10% is what? 44 bucks. That's going to put us right at 400. If the market drops 4%, we're going to make $2,000 on this trade. If it slowly grinds down 5 to 10%, we're going to make even more money. Well, not make more money, but we're going to make decent money on that. So we like these. These types of things are types of things that I like to have on. I like the 1-1-1 better. This is just a big beefy 1-1-1 that gives me a lot of opportunity to make some money if we go down slowly. I don't make any money to the upside. It's not killing me. I'm not killing my theta on it because $23 is not really a big deal. So it cost me essentially, I'd like to put it on for a credit. I couldn't quite get it even credit. So it cost me a smidgen, 20 cents to put this sucker on. But you know, I'll lose $23 to have this hedge on. And by the way, this thing's up 427 bucks right now, right in here. And if we drop any further, it's up 500, 600 bucks in this area. So if we drop another 5%, this thing's going to be up 600 bucks on a trade that cost me 24 cents. So times 4. So it cost me $96 to put this trade on. So for $96, I have a hedge that can pay me $2,000, and it's already paid me $500. What's the rate of return on that sucker? Okay, so you paid 96. It's worth right now today, this exact second, 427. So it's a 400% winner today. Yeah, I guess that's okay. Most people may want to make more. If you're trading stocks, great. I got one stock that I've been showing you most of the session today, which is basically the S&P, just different versions of it. All right, margin requirements. There's where it's a little bit more interesting. So we'll talk about margin in a minute. So there's the 4-4-1 trade. I think we've covered most everything in here. So we covered the, the 1-2-1 or 1-2-0s. We covered the 1-1-1, which is really a 2-2-2. We covered the 4-1-1s. We covered another 2-1. And then now we've got one last trade to show you. And this is what we call a risk twist spread. Crazy stuff, crazy name on it. This one is out 80 days. But when we put these spreads on, we do these at roughly 120 days. We do these every quarter. So it goes on every quarter. This went on June 30th. So I won't do another one of these until September 30th, October 1st. And this is a risk twist spread. So essentially what you do with this one is I'm going to center it here, and we'll go through these more specifically at another time, but I'm buying 3 and I'm selling 1 on either side of it. So it's a 1-3-1. But it's a reverse, not a selling the middle. It's not like a butterfly that's a 1-3-1. It's a reverse butterfly. So I bought the middle, sold the 2 wings. And what that gives me is, if we go up here, I'm going to lose 500 bucks. So this is the cost of a hedge. So this is a true hedge. The other ones are more trades that give me hedge-like properties. This is a true hedge. This is designed that if we drop down into here, we start making money. So in the next couple months, if this thing starts to drop, and look at this sloping line as it moves up here, if we drop to that 400, remember, I'm going to get assigned a couple SPY shares. If we keep dropping to 390, maybe I get assigned another SPY. Okay, but now I'm starting to make, you know, some money. And then look at the line. So if the market really drops again, now I start to make $3, $4, $5, $10,000 or something if this thing goes way down. So this is designed as another disaster hedge type of a thing. We would have to drop 20%. 10% gets us into here, which is still maybe decent. It puts us right in this valley of death, but it's okay because the valley of death only matters at expiration. It does not matter until expiration day. You can see with the T+0 line that dropping into here actually is not a bad thing. We actually make money. If we drop to 400, we're up $470 on this thing. So if this thing starts to drop fast and we drop 10%, you know, today, tomorrow, I make $600. So this thing starts to really kick in. If we drop 10%, you know, 20% or something in the market, then we really start to make some money. So we have a nice hedge on. So there's the risk twist spread, crazy name. And there's all of these SPY trades. So all in all, when you start to add these things up, they all start to work together in here. And then let's jump into VIX briefly and talk about what we have on in VIX. So VIX, we have 2 vol spreads in VIX. And essentially what that is, and this is the more recent one, let's take a look at the VIX vol spreads. Okay. Yeah. So here's the VIX vol spread. Essentially what that is I go out about 45 to 50, 60 days. I think most of these VIX spreads are around 50 to 60 days. So this is the oldest one. It's still hanging on. The last one paid off nicely. It's a 25-45 spread. I own 5 contracts in it. If VIX, which is sitting right here at 19 and change today, up $1.60, if VIX spikes, can VIX spike? I don't know. VIX spiked up here all the way to 28. I can go back a little bit further. Okay, so VIX spiked up here, you know, to 28. There's chances of it spiking up here to 24 or 5. So if VIX spikes, this thing starts to pay off. If it spikes to 25, 28, I mean, look at the T+0 line, the orange line anyway. Does it have to expire in here? No, it just has to make a big move. If VIX flies 5 points tomorrow, okay, this thing's up, you know, somewhere in the neighborhood of what, you know, $1,000. Oh, that's the Theo line. Yeah, $500 or something like that, for 200 and some bucks. So as this thing starts to move up, all right, all the way up into all the way up to here, then things really start to pay off well. So all we want is a gigantic VIX spike, and then we close this thing out up in here. So there's one that's on right now. I also have a second one on that I just put on. So we posted this one the other day, which is a 25-35 spread. So we're sitting, you know, here's where we are. If this thing rockets up on it, then we start to make money. So if this thing starts to get up again into the mid-20s, if it gets to 30s, you know, you're talking making another $2,000, $3,000, which offsets any of the other trades that we have on. So it's again another spread trade, and the odds of this happening in 30 to 45 days, pretty good. So it looks like we, you know, every month or so, we're getting some kind of a spike that takes us up into there, which allows me to take this thing off and for a profit. And then just because I could, I bought some long VIX calls. So here it's just all profit if we start to move up into here. So if VIX does spike up again, then these things will be worth a couple $100. Didn't cost me much to put this on. In fact, that long, cost me $600. It's the cost of doing business. So it's the cost of trading. If you're running trading like a business, you have income, you have expenses. Some of you just think your expenses are your losses. Well, no, losses is just less income. It's not an expense. A loss is not an expense if you're trading. It's just lack of income to me. Expenses are putting these hedges on. It cost me $6.40, but it's paying off, providing me with some income. So I paid for it, okay, as a hedge, and if I lose it, I don't really care. I'll lose $600 all day long for the chance to make hundreds of dollars if the market goes out, and it protects the rest of my portfolio. All right, Walgreens Boots Alliance, we have a butterfly on in here. It doesn't look specific, promising right now. This thing is getting close to the end, but this was a broken wing butterfly, no risk to the upside. We don't have a lot of time left on this one. So what, 3 days to go till Friday. We need Walgreens to, which is hanging in there today, it's up. We need Walgreens to shoot up and get into this spot here. We needed to get to at least 49 to start to make some decent money. It's at 42.50. Can it get there? It could. We'll see what happens. If not, it's one of those. Goes bye-bye. And then XLY is a different sort of leap. So this one, we initially bought XLY, let's see if I can find it, way back in March. But we bought a deep in the money call on XLY. So when we look at XLY, this was a deep in the money call, and initially it had 322 days. So this was a 1 year out trade that we put on almost. We put it on just in the beginning of March. And when we bought this, we bought it at roughly an 80 delta. So we bought it at an 80 delta, I don't know where. Something along those lines, I believe. But we bought this, I think it was 80 delta is what we bought it at. And you can see we've moved up substantially since then on this XLY trade. So this is one where we've been selling a poor man's covered call against it. So we bought the 140, which was an 80 delta, and then did somebody join? I don't know. Looks like something was flashing. Maybe I just missed them and didn't let them in. So on this trade, we've been selling calls up here in the 20 delta-ish range. I don't really go necessarily by delta. I really try to hang right around the edge of the expected move. We'll probably sell another one. I haven't sold one this week, expecting potentially a lot of movement in XLY. And XLY, for those of you that are in the know or not in the know, when we look at what stocks make up XLY, I believe Amazon is 23% of this. Let's see if I can find it here. Amazon is 23%. Tesla makes up 13%. So between Amazon and Tesla, that's almost 36%, 37%. Then it's got 8% Home Depot, 4% McDonald's, 4% Nike, 4% Lowe's, some Starbucks, some Target. And then TJX, which we also have a trade on, like 2%. But mainly, this is a proxy for me for Amazon and Tesla, which is why I really like this stock a lot. It's one of my favorites. This is another one. This one I happen to buy in the money, 80 delta, and I will write calls against it while I continue to own this for quite a while. And is it up a lot? Yeah, it's up $1,800. Yeah, not bad. So we've made some money on it overall on just the long. That doesn't count all of the shorts that we have been putting up against this XLY trade, which have been pretty good. So we've been paying some of this down as we go. It's almost a 50%, trade already. So we've almost made 50% on this trade. in what, 100 and some days, couple, 3-4 months. So 3-4 months to make 50%, it's not too bad. I know people want to make 50% today, and you know what? I don't care. That's not what I do. I'm here to make daily cash flow, weekly cash flow. I want to make anywhere from 1% a week or so, 3 to 4% a month. If I do that, I'm going to end up the year 36, 40 some odd percent up. I'll double my money every 2 years, and I've got hedges on here. I've got all kinds of opportunities if this market goes down, and I just make cash every single day. So we've already made some cash today with 2 trades, and that's all we had to do today is we made 2 trades, and then we just sit and let everything else percolate. We don't have to do anything. We closed out one of the MES. We added another MES trade. So let's take one more look. I know we're just a little over my time. I don't want to take all your morning, but let's take a look at putting on a couple trades in SPY. Let's look at putting on a 111 trade. So what we want to do to put on a 111 trade is I'm going to look for about 45 DTE, which would really be this September 17th in here. What do I have on in September 17th? There's that 441 that's sitting on there. But let's take a look at this 52-day. If you know what, there's no trade on at 38 short, but let's take a look at it. So let's put on a 111 trade in SPY. So essentially what we're going to start with is a 5 wide spread, and I don't really care what that spread looks like. Let's say this is the spread, and we want to pay roughly $1. All right, so we're pretty close. There, $1. So exactly $1. The 431, 426. That's going to cost us $1 to put that spread on. And in order to pay for this, I'm going to go out here and I'm going to sell something for $2. There's the 397. Okay, which is now giving me $1 credit. So there's the trade. And then for me, I like to go 2 contracts at least on this thing. And if I go 2 contracts on this thing, then I have the opportunity later to buy back one of these. If the market continues to stay where it is or move higher, then I can take some of my risk off. And I have, or I can, if I take one off for $1, I buy it back for $1, then I have essentially a free spread that if we go down, we're going to make some pretty good money. We're going to make $5 on this trade. If we go down because of the 5 wide spread. But you can see this is a 111, which is really a 222. But there's your buying power, folks. So if $9,000 is too much for you on it, then that's where we're going to look at MES because the buying power is significantly less. I don't care as much about the buying power. Because I just want more income trades coming in. So I'm going to have another $100 potential income trade on in SPY, but that's my buying power usage. So it is going to cost a little bit of cash to do that. If I was going to do the same trade in MES, okay, so let's go to MES. We're going to go out to roughly the 35-day. We've already got some stuff on here, but because we have all of these other things on, doesn't work great. Let's see. Yeah, we'll pick something in here and we'll just see how it goes. So if we do, we're going to have to go 50 wide here because we're dealing with the full MES, and I don't remember where we were, but we got to go about 50 wide. So let's figure something out for $10. That was pretty good. Yeah, so right here, $10. So because of the size, we'll have to go 50 wide, and we're going to go for $10 instead of $1 because 10 times larger. But now it cost us 10, and I'm going to go out and find something worth $20 to sell. Okay, so now we have a $10 credit on this thing. So we have a $10 credit. Now this is really goofy because of what I have on, but the buying power here is going to be so much less. which allows you to put these trades on. Just need to understand that span margin means that your buying power or your margin requirements on futures fluctuate with price and your overall portfolio risk. So if your portfolio risk goes up, the margin can increase after you put the trade on. So let's say this cost me to put on somewhere around $6,000. You know, I'll just throw it out there. So let's say it's $6,000 buying power. If the market starts to sell off and becomes higher risk trade, they could then want to hold 9,000 against this particular position. So my margin on this can go up. So it can increase. It could also decrease as the market moves up. Your margin can decrease. But this is how we would put down that 111 in either trade. Excuse me. And then lastly, if we wanted to do a 411, just so you could see it, I think that's what we had on already, but the 411 is a little, again, a little bit different trade with it because it's a lot meatier, a lot beefier trade that we have. But let's see what we can do to put on 411 and give you an idea of what the buying power looks like on that trade. So we want to put on a 5-wide put spread, and I don't remember where we were, but let's say it's a 5-wide put spread for about $1. So I don't know why I started that far down. Okay, so here's my 5-wide put spread. So if I'm going to do a 411, I'm going to do these. I'm going to do these, and I'm going to do 4 of these. So 4 of these. Okay, it's a put spread. Okay, so it's a debit spread, and it's only going to chew up $400 in margin because it's costing me $1 times 4. Makes sense? And then what I would want to do down here is I would find something. I want to sell a put for about $1, a $4 credit. So probably this 418, but I would only sell 1 of those. Okay. So here's the trade, the way it looks now. You're going to buy the 431, sell the 426. It's roughly $1 spread times 4. It's going to cost me $1 or $4 total. So I'm going to go out here and I'm going to sell something else for $4 to pay for it. And right now I'm paying, again, I want to get this to 0, or ideally do it for a small credit. This is a bigger credit than I want, but if we take a look at this thing, I hate this Tastyworks thing. If they could only fix that. So here's what this one would look like. If I put this on for a credit, now I have a $70 credit, so I have no risk to the upside, and then I have that beastie looking trap down in here that we could potentially drop into. So there's where we would be on SPY. So it'd be the 431, 431, 427 with a 418 kicker down below if you want to put on the 441. And it's not a big trap, but it's a decent size trap in here that you can get. So something to look at. And then your buying power, though, is definitely going to be affected because of that long put. I'm back to about a $7,000 buying power overall on this one. So what's the most efficient use of the trade? I like the one, to me, while this is meaty and beefy, I really like it. The 111 uses similar buying power as well, but I get a nicer upside. I get a wider trap for about the same buying power on that. All right, I hope that makes sense. I think I covered most everything. Oh, I got one more. So let's go one more. So what else? The other things I'm doing is around 90 days, I'm putting on strangles in MES. So let's take a look at this sucker. I don't know if I can fit it all in here. So yeah, don't know if I can fit on the screen. Yeah. So at 90 days, I put on a strangle and I'm using MES. So this strangle, which one was this one? This is a more recent one. I did the October 15s. And when I'm doing these strangles, I'm going out to about 6 delta on the put side and about 7 delta on the call side. And that's what I sell. I took in a credit on this one. So I took in an overall credit on this trade of $1.14. Oh no, I'm sorry, I'm looking at the wrong thing. Let's see if I can find it here on my sheet. Okay, I'm sorry, I did this for $28. So I took in a $28 credit. So if we stay in here on this particular one, now obviously with the market moving higher, we've moved up, you know, a bit on this one, but you know, moving back down today. And what we'll do with these is we will close these at a 50% profit or at 21 DTE, no matter what. And then if I have a 4x loss, I'm out. So that's what we put this on. So and when you put these on an MES, the buying power is not that bad. So it's about $2,000 buying power to put these strangles on. And I've been putting them on almost weekly. And I will only max out at about 3 of these. So you got one here. Yeah, we're getting up top end, but we still have to go up 300 more points on that position. And we're down a little bit on that one right now. This other one, which is a little bit more narrow, or I'm sorry, more narrow. The other one here, okay, is you know, looking decent as well right now. If we just hang in this area, we'll make $600 on this one. Although I won't wait till that. I'll probably take it off at 50%, so we'll make like $300 on this trade, and we're hoping to make this, you know, get out of these in, I don't know, 30 days or so. Just experimenting with them. I'm not worried about the upside because if we start to hit up here, we have other trades on giving us long delta. If we go down here, then we have hedges on. So it gives me the opportunity to put these MES trades on. And I typically do 5 contracts on the MES on these. All right, so I hope that makes sense. Gives you an idea of all the different trades that we have on in the account today. Market's down, we're down a tad today in the overall account, but we've realized a gain already today of a couple $100, and a couple $100 every day is what we're looking to do. And if we hit a couple bigger ones, then we'll be in good shape. Other than that, the biggest drops today is NEO is getting whacked. So NEO's getting crushed pretty hard today. It's down $4, breaking some support. NEO looks pretty ugly right in here. So we'll have to keep an eye on that. We could get assigned on it. We're a couple bucks below. It is what it is. We'll deal with it, and we'll wheel it if we have to, but hopefully we'll just roll out. We still have some time on NEO, but that's what's hitting the account today is NEO getting whacked and XLY dropping a little bit today as well. Other than that, everything else looks decent. VIX is up nicely today. Hedges are up nicely today. SPX SPY trades totally flat. So all good. That's all I got for today. I hope this was helpful to everybody. I got to get rolling, and I hope you got something out of this, got to see exactly what we do, and a handful of the different trades that we have on and how the different hedges work. All right, guys, have a fantastic day. We'll see everybody in Slack. Enjoy a great rest of your day.